Hi everyone, my name is Doug Campbell with Right Way Options, and I want to thank you for coming back to the third video in my series, A Simple Method for Consistent Profits. Hey, if you could do me a favor, if this is the first time you've stopped by, or if you've come back to watch this series, if you could do me a favor and click the subscribe button, I would really appreciate it. Now, what I want to talk about today is I want to talk about a method, a process that I use that I actually make trades come to me. If that's something you're interested in, stick around, we'll get to it. Well, hey everyone, thanks for sticking around. I want to take a second here to just say, if you get a chance, subscribe to this video series, because as I go, I'm just going to continue adding videos to this. And once I finish the Consistent Profit series, I'm going to go into something else. So please feel free to subscribe, and you'll get notified then when those come through. So I'm going to kick off here and talk about some of the common problems that I run into, okay, and how we can improve our workflow, the things that we can do. So some of the common trading problems that I run into is just a really poor emotional decision making, and that happens with most traders. There's always an issue out there that we're dealing with. Something's going on, but one of the things that plagues most of us is this sense of rushing. We're always hurrying. We're always having to chase down a trade. Just hurry, 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 hurry. We're chasing that stock that's popping today, that new flavor of the day. And if you're in that situation, let me ask you this. At the end of the trading day, are you just about completely exhausted? I mean, worn out, just completely emotionally and physically worn out. That is one of those things that used to happen to me all the time. And it was that always in a push, always rushing. And I'm going to show you a method that I use to prevent you from feeling that, to have that emotional issue that's probably affecting your trading. Okay. So we're always in this rush. We have no time to plan a trade because it's always just hurry, 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 try to get to that trade. So we're kind of constantly in this chase mode, like a dog chasing a car, where stocks are popping, we're racing around, we're trying to catch up to everything. And what can be worse than that emotional decision, getting in at the wrong time, is you can't be all places at one time, right? You can't look and do everything at the same time. And it's missing that great trade that just keeps going and going and going. You had looked at it, but you were distracted by something else. And then that trade takes off. Now you can't take it, and you're just kicking yourself. Well, a lot of the reason this occurs is many of us have a very inefficient work process. And this used to bother me a lot because I felt like I couldn't move fast enough. I couldn't do everything I needed to do to be really successful in trading. And I started wasting an awful lot of time trying to build scans or a set of indicators, anything that I could narrow that field faster and just narrow that down to those perfect 5 or 6 trades, right? Well, let me tell you, after years and years and years of work on that and spending a lot of money with a lot of people, let me just save you some time. There's no such thing, okay? Markets change, things happen. There's no such thing as a perfect scan. You're never going to find it. It's not there, okay? So I started asking this question: what can I do to improve my work process? How can I slow down and be better prepared for a trade? And I asked this question, is there a way? What can I do to make a trade come to me instead of me chasing it? I want that stock to earn my money, not me race to it, prove to me that you're worthy of my money. Flip the tables. Don't chase. Prove yourself. Okay? Prove that you can make me money, and then I'll think about investing in you. And that's what I wanted to get to, and why I'm so excited about sharing this with you, because I have complete confidence if you adapt this to your trading, this alone could help you a ton. This was one of those aha moments for me that really changed my trading, because I got out of that mode of always just pressing, hurry, hurry, hurry. And I went to a simpler style, and I started working from what I call a qualified watch list. Now, what's a qualified watch list? Well, first we have to narrow down that field of stocks, the things that we want to look at. And the first way to narrow that down is your price requirements. When I'm working with folks, across the United States, I run into people all the time, and they spend time looking at charts that just don't fit them. They have a $20,000 account, and they're looking at $100 share stocks. That's a waste of time. That's not efficient. Don't do that. There's no need to do that. Only look at the stocks that actually have merit for you. Narrow that field, okay? And then also narrow the field by those that have that just don't fit you personally, that don't fit your risk tolerance. For example, one sector, biotech sector, is extremely volatile. It's known for being very volatile. And for some people, that is a completely unacceptable stock. You don't have to look at them. Stop looking at them, because we're going to build a watch list of stocks that only work for you, that apply to you. So we're also going to screen those out by volume. How much volume do you require? For example, you may want 250,000. If you're kind of a low volume trader, you may want 1 million shares in volume. Whatever it is that you look for, your criteria for volume, you can screen those out and make sure it fits you. When you look at those charts, you also want to screen out those that just have no cohesiveness to the price action, just a whole bunch of wicks and tails on the candles, just kind of spread out and hopping around all over the place, lots of gaps. Quit looking at them. Dump those out. We're not interested in those charts, okay? We want only charts that fit us. Now, the last criteria, probably the most important one for this method, is you want to have the stocks that fit that primary condition. And that primary condition is a trending stock. That's what we're looking for. We're looking for a stock trending with the direction of the market, okay? And by doing this, it really improves the efficiency of your work process. And let me explain that just a little bit further here. So I clipped this out of my TC2000. I use TC2000 as my charting package. And as you can see, this is a very, very simple scan. I mean simple, three steps here. I'm screening out the stock price, something between $5 and $200. Now, don't get hung up on the price. You might be $3 and $20. You might be $10 and $50. It doesn't matter what the price is. Just make sure it fits you, that it's logical for your trading, okay? What will work best with your account, your risk tolerance, okay? And then screen out that volume. You can see I want volume greater than 1 million shares. And by the way, I get more trades than I can possibly trade, okay, with this initial scan, okay? I can't trade the number of trades that come through on this. The last and final criteria, very important, is I'm looking for a trend. And all I did was created a scan condition that I'm asking for the 34 exponential moving average to be trending up 20 days. Okay, here's actually the code for TC2000. Feel free to reverse engineer this for anything. If you use TC2000, copy and paste it as a condition, bam, you're ready to run this scan in just a couple of minutes. And so right here, if I would to explain this, and by the way, there's nothing magical about the 34 EMA. It's just one that I picked. It works great in helping you find a trend. Okay, so all this code says is exponential average, the exponential moving average close of the 34 20 days ago is less than the exponential moving average close of the 34 EMA 15 days ago. That's all this says. And then 15 days and 10 days, and 10 days and 5 days. Okay, so I just narrowed that down to current day. So I know everything that pops up in this scan fits my price, volume, and I know that they are trending. All right. So, for example, here's a stock that popped up in one of my scans quite some time ago, back in February. And as you can see, I put the 34 EMA on here just to demonstrate how well it identifies a trend. Okay, and that's all I'm looking for. Most of the time, I don't have the 34 EMA on the chart. I just put it on there to just demonstrate how we turned over from this downtrend or sideways move to an uptrend. And that's what I'm looking for. And right about in here, 20 days into this trend, this stock pops into my list as a potential trade. And remember, I'm looking for low risk entries, so you can see all the way through here, low risk entries. All right, so I have this analogy, and it works pretty good for trading. I live in a rural area and a lot of farming around me, and I don't know why this came to me this way, but what I'm trying to do is I'm farming for profits. Okay, I'm farming a watch list. And when you think about it, it's really very much the same. If you're a farmer and you're out there to plant your crop, the first thing you do is you go out and you plow the field and you know get it all ready to go, preparation and everything, and then plant. And then what we have to do as traders is at that same point, what we're trying to do is build our watch list. We're building that watch list up of qualified stocks. So we're preparing, we're planting those potential seeds that we can harvest down the road. Okay, and then the farmers are out there, they're fertilizing and watering, to get that crop to grow. What we're doing with our watch list is we're doing the same thing. We're nurturing it. We're preparing for the next trade. We identify support, resistance, trend, patterns, and we're watching that price movement, preparing for the next potential entry into that trade. Farmers go back out and they cultivate and they weed. They've got to get those weeds and everything out of there so that crop will really grow. We have to do the same thing with our watch list. We have no time to waste as a trader, so we want to be efficient. If we have a trade, all of a sudden the stock is jumping all over the place, it doesn't make sense, you can't read the price action, dump it. We don't need that anymore. Get rid of that chart. Stop wasting your time on it. If it falls out of trend, get rid of it. I don't care if you love that stock. If you think that stock is the greatest thing since sliced bread, it's no longer fitting your criteria, get rid of it. It's wasting your time. If it comes back on your list later on, great. But until it does, stop looking at it. We don't need to do that anymore. We're going to manage that watch list. What we're doing is we're honing that down to a better and better, we're refining it to a better and better watch list of trades that are setting up. Okay? And then it comes time to harvest. The farmer goes out there and harvests that crop. And what we want to do with our watch list is we want to use that to capture and harvest consistent profits, consistent gains, because we're working that list and we're working from that list. We don't have to chase. We don't care what Jim Cramer has to say today. We don't care about what stock is popping up or what's, in the news today. That doesn't matter. What we want to do is follow those charts that we know qualify for us, and we're going to wait for that next trade. Okay? We want to avoid those distractions and remove all that noise that's been affecting you all along, because we don't have to do that anymore. Now, what I do is I'm usually flipping through my list 3 times a day. So I get the question a lot, well, how many stocks should I have? Well, how many stocks can you handle? A new trader is obviously not going to feel like they can look at that many charts, maybe 25, maybe 50, maybe 100, whatever that number is for you. I can flip through stocks. I've been doing this 27 years. I can flip through stocks very, very quickly. But I understand not everyone can do that, okay? But you'll get faster and faster as you go, because remember, we're working from the same watch list, not the stuff that's popping and, catching the attention today. It's the things that have been trending and they're strong and they're moving, okay? And so we're continuing to, just every day we're going to watch that. We're going to keep cultivating that watch list, manage those charts, waiting for that next entry. So there's no more chasing. So here's a good example here in BlackBerry. And by the way, I just clipped this right off of the chart today. And here's one of the things that I run into a lot when I'm working with people is this constant thing of chasing. The stock jumps and they hurry, and they rush in. And then the stock almost immediately pulls back. They sell it just before the stock turns around and starts back up. Now, anybody that's been trading very long has done that, okay? You've felt that. But if you feel this commonly happens to you, okay, where you would just swear that there's got to be somebody, there's got to be a camera in your office, somebody's watching you, because as soon as you pull the trigger on that trade, it pulls back. I mean, like almost all the time. It's a sickening feeling. That's an issue of chasing. You're chasing, or you're buying at resistance rather than buying at support. And so we want to avoid that. And the volatility stop can help us with that. So if you were looking at this volatility stop, you'd have to notice how far your stop loss would be from this trade. All you got to do is measure that. I don't want to take 10% risk on that trade. So we wait. We wait, and it pulls back and then provides a low risk entry where our stop loss is close. We can enter that trade comfortably. So we wait for the trade to come to us. Now you can see, does it matter if you miss this one? Here's the other thing. We panic when we miss something. If you miss it, it doesn't matter. Sure, you want to catch as many of these as you can, but how many great trades at a time do you really need? We want quality over quantity. We want good trades that fit us, over a whole bunch of trades that may not, okay? We want that quality trade. And so if we're in a quality trend and the stock just continues to trend, okay? So if we miss this one, no problem. Just wait. The bus will be around the corner here again. A nice close entry, easy trade. And or here's one, and we just follow that chart up. Now, I put no here on this one because it moved really strong today. And here again, you see these extraordinary price moves, and people will chase that. There's no need to do that. If you were to measure this to your stop, you'd realize that I don't want to take that much risk. Okay? So all we have to do when it starts to move strongly is wait for the entry, because a trend stays a trend until that trend breaks. Okay? So no more rushing ever. We make the trade come to us. Here's a chart in BABA, and one that we've traded a lot in right way options. And you can see, had you just followed this method, you could have easily entered this trade somewhere here in March or first part of April. See the low risk entries here? We just wait for the trade to come. We get a nice buy signal. Buyers reacting to the price trend. See there? They're reacting to that price trend. It's time to go up again. So we can enter that trade with a real close stop loss and follow it. And notice you could have been in that trade till the middle of May just by moving your stop loss at the end of every day on this chart. And notice right now, we're watching this closely right now on right way options, because this looks like it's setting up for more potential upside. Just over and over and over, an uptrending stock providing entries. We can swing trade it over and over, or we can hold it longer term if we choose. So we're going to stop chasing, and earnings is a place where people chase a lot. Okay, there's all this emotion and drama built up around earnings. Well, notice what happened here in Wayfair. And by the way, this chart, kind of a bonus to everyone, because this is happening right now. So if you watch this video quickly, you'll be able to maybe participate in this trade if the market remains strong like it was today. And moves up from here. Wayfair looks very strong. Notice our beautiful trend here. Okay, gapped up on earnings, pulled back and rested. We don't have to chase the earnings. We wait for the low risk entry. Notice it pulls back. Beautiful price support set up here, and then pow, buyers stepping in. And all we have to do is follow that chart up. Isn't that fun? No more chasing, no more rushing to a trade. Here's a trade in ANSS, and you can see the same thing here. Gap up, big gap up on earnings. Don't chase this. Wait. Look at how easy it is to enter this trade over here and have a very close stop. And what a tremendous trade that can be. So suddenly, that old saying, the trend is your friend, it truly is your friend with this system, and it's really easy to spot and identify. And this will improve your workflow and make everything that you do easier. So next time, in the next video, I'm going to talk about planning trades a little bit and management of those trades so that we can get this entire system down. So if this was good, if you appreciate this, hey, just do me a favor, hit like for this video, like the video, and subscribe, and keep watching, because I'm going to keep adding to this series, okay? Everyone, thank you for taking the time with me. I do appreciate it. Hope you find this helpful. Take care, and I'll talk to you soon.